Welcome to the first portfolio update under this brand. This is a monthly type of video where at the end of every month, I show the full value of my portfolio, stocks I bought, dividends received, performance, and much more. All of it for free and in full transparency. So if you want to follow along with this type of monthly updates, all you have to do is subscribe. So with no more additional fluff, let's dive in. So starting off, this is a portfolio valued at roughly $34,500 with a weighted dividend yield of 2.36% and a projected annual dividend of $684. This is projected, not the dividends I receive in March. As you can see, the value of this portfolio has grown throughout the years. And as a low-income 9-to-5 employee, I'm proud of this progress and compounding, seeing that in 2020, I was under $2,000 and now I'm at $34,000 with no sign of stopping. With a combination of my contributions, dividends, and stock performance, it is likely that I'll reach $40,000 at the end of this year. We'll see the progression through the monthly updates. Performance-wise, the year started very choppy for the S&P 500 and my portfolio, but it is currently beating the market. First month, beating it by a small margin to then extend those wins with the month after. Now, in the current month, March, with the current geopolitical situation, both my portfolio and the S&P 500 got dragged down into the negatives. However, with the composition of my portfolio, I have some sort of volatility protection. Therefore, that's why I'm beating the market by 2% year to date. The portfolio is a combination of growth and low volatility. Half of the portfolio is in tech in terms of allocation, and the rest is divided between healthcare, REITs, pharmaceuticals, consumer defensive, and cyclicals. This combination allows me to have growth during both runs and a defensive stance when the market trends down. Also, all of my holdings pay a dividend, which allows me to invest additional cash into my holdings and further increase my cash flow. Going over my holdings from largest to smallest, we have Google, Hershey's, MasterCard, Visa, Automatic Data Processing, S&P Global, Microsoft, Texas Instrument, JP Morgan Chase, Starbucks, Johnson & Johnson, Kroger, Realty Income, AbbVie, Apple, Pepsi, Waste Management, Nike, Colgate, Home Depot, and Procter & Gamble. This is the composition of my portfolio, and remember, this is not investing advice. This is just my update and showing you what I do with my money. Now, every week I deposit $160 into this portfolio and deploy it in a way where I find opportunities, meaning that every week this money is deployed into stocks. This month, I bought Automatic Data Processing, Microsoft, MasterCard, S&P Global, and Visa. ADP has been down due to a weak job market, but the fundamentals of the company are still growing. When the stock price of a business goes down while the fundamental goes up, it is a buy for me. The same will apply for Visa and MasterCard. They have stayed relatively flat while fundamentals keep going up, so another buy opportunity. Microsoft has been heavily down in value due to the re-rating after the exposure that OpenAI composes a huge portion of their AI cloud clients, causing investors to sell the stock due to higher risk. S&P Global is also down due to apparently AI agents being able to copy their business model, which to me I find highly unlikely as S&P Global's data is proprietary and AI can simply copy it out of nowhere. Also, S&P Global has their own AI investments that threatens their business model. Overall, I'm pleased with my buys and will likely add more at these prices. For the month of March, 11 companies paid me a dividend. The dividends go to my buying power and I use it to buy better opportunities, meaning I don't have drip on. The 11 companies that pay me a dividend are Visa, $4.21, Kroger, $7.28, Johnson & Johnson, $9.17, S&P Global, $4.63, Microsoft, $4.25, Realty Income, $5.92, Hershey's, $22, Google, $2.76, Home Depot, $4.69, Waste Management, $3.93, and Pepsi, $9.89, for a total amount of $78.73 in dividends for the month of March, putting my dividends for the year to date $173.49. March has become one of my favorite checkpoints for Q1 because it shows how far this journey has come. Back in 2020, this was barely getting started. The income was small, barely visible, but that's how things always begin, planting seeds without expecting immediate results. Fast forward a year and things started to move. Contributions, consistency, and reinvestment began to show early signs of progress. Not life-changing yet, but enough to prove that the strategy works. By 2022 and 2023, the shift became obvious. The snowball effect kicked in. Each dollar invested started pulling more weight, and the growth wasn't just coming from new money, but from the portfolio itself doing the heavy lifting. 2024 is where things really stand out. At this point, the compounding effect becomes hard to ignore. The income is no longer small, it's meaningful. It starts to feel like the system is working with you, not because of you. 2025 shows something important too. Not every year is explosive. Growth can slow down, and that's part of the process. What matters is staying consistent even when the numbers don't jump as much. And now 2026, this is the result of stacking years of discipline. The income reaches a new level, not from doing anything drastically different, but from doing the same thing over and over again. This is what long-term investing looks like. It's not about quick wins, it's about consistency, patience, and letting time do its job. For the annual dividend, this is where things start to get interesting. Not seeing the total income grow, but understanding where it's actually coming from. Some positions are clearly doing the heavy lifting. These are the backbone of the portfolio, consistently generating a large portion of the income and providing stability. They're the ones that make the biggest impact and show a strong allocation and time in the market can do. Then there's the middle group, reliable contributors that now may stand out at first glance but play a crucial role. They add balance, diversify the income stream, and steadily grow over time. These are the positions that quietly compound in the background. And finally, there are the smaller contributors. These might be newer positions or ones with lower yield right now, but they represent future potential. With time, reinvestment, and continued contributions, these can move up and become meaningful income drivers. What stands out the most is the diversification of income. It's not dependent on a single source. It's spread across multiple positions, industries, and strategies. That reduces risk and creates a more resilient cash flow over time. This is how a dividend portfolio evolves. It's not just about how much you make, it's about how that income is built, layered, and strengthened year after year. And the goal is simple. Keep growing each layer until the income starts working harder than you do. In the interest of full transparency, the following graph illustrates my invested capital compared to my actual capital gain or losses. This graph uses dollar amounts rather than percentages to provide a clearer picture of exactly how much money is being made or lost in each position. The data is visualized as follows. Blue bars represent the total amount of capital I have invested in a specific position. White bar represents the current gain or loss. If the white bar extends to the right, the position is in the positive. If it extends to the left, it indicates a loss. Like the other charts in this update, these figures fluctuate monthly. A position currently in the red can easily turn into green depending on market catalysts such as geopolitical situations or significant press releases. Please note that due to character limitation, some specific numbers may not be visible on the chart. If you would like more details on a particular holding, feel free to ask in the comment section below. Looking at the portfolio as a whole, this is where the real story unfolds. This is the total return of my portfolio. Some positions are performing exceptionally well. These are the clear winners, the ones carrying a big part of the portfolio and showing what happens when strong businesses are given time to grow. They validate the strategy and build confidence in staying the course. Then there's a solid group of steady performers. They may not be explosive, but they are reliable. They continue to move in the right direction, contributing to both growth and stability. These are the kinds of positions that make the portfolio feel balanced. At the same time, not everything is working, and that's part of the game. A few positions are currently underperforming. Some are going through temporary challenges, others may just need more time. This is where patience and convictions are tested the most. What matters is that the portfolio isn't dependent on perfection. The winners are doing more than enough to offset the laggards, which is exactly how a diversified strategy is supposed to work. This is the reality of investing. You won't get every pick right, but you don't need to. As long as you stay consistent, keep learning, and let time play its role, the overall direction can still move forward. That will be it for this portfolio update. If you want to follow along these monthly updates on how my portfolio progresses, or you are a like-minded investor looking for perspective, make sure to subscribe. Also, liking this video helps so new investors can find me and be inspired. Thank you for watching, and I'll see you in the next one.